Hi all, good morning. Welcome to IlT Academy. Today we are going to discuss about admission of partnership. Coming to admission of partnership, we are going to do revaluation account, partners capital account, cash account, bank account, all problems on admission. Let us do the first question. Now the basic question is W and R are partners in a firm sharing profits and losses in the ratio 3:2. The balance sheet as on 31st March 2024 was as follows. Now W capital is 50,000 and R's capital is 50,000. Total it is 1 lakh. And on the above date, C was admitted for 1 by 6th share in the profit for the following term. C will bring 30,000 as his capital and 10,000 for his share of goodwill premium, and half of which will be withdrawn by W and R, and there are few adjustments. Let us do this question. Now I will tell you stepwise how to do this sum. Okay. First we need to record capital account balances. W, R and C are the partners. W, R, C. W, R and C. What are the capital balances? 50,000 and 50,000. Why balance brought down? Write down capital. In the first step, record capital account balances and cash account balance. 50,000, 50,000. And coming to the cash account balance, to balance brought down. Yes, 12,000. Now check for reserves and losses. Here we are having general reserve. General reserve is how much? 5,000. And what is the old ratio? 3:2. Now 5,000 into 3 by 5, which is 3,000. And 5,000 into 2 by 5, which is 2,000, will be distributed among old partners. So by general reserve, 3,000 and 2,000. Now coming to losses. Do we have any losses over here? Preliminary expenses, advertisement, suspense, or anything? No. Right? Perfect. Now let us start with our first adjustment. C will bring 30,000 as his capital. So cash to C's capital. That is 30,000. Now goodwill 10 and 10,000 for his share of goodwill premium. So cash to premium for goodwill. That is 10,000. Cash to C's capital. So by cash account, and in C it is going to be recorded as how much? 30,000. Now goodwill bought by the new partner will be shared among whom? Old partners. In what ratio? Sacrificing ratio. Sacrificing ratio formula is old ratio minus new ratio. Hence we don't have new ratio. Old ratio is only the sacrificing ratio. By premium for goodwill. 10,000 will be shared among W and R in the ratio 3:2. 6,000 and 4,000. 10,000 into 3 by 5, which is 6,000. 10,000 into 2 by 5, which is 4,000. Done. This is how goodwill is bought. Now the goodwill which is bought now is withdrawn by W and R, and not full. Only half of the amount is withdrawn by W and R. So to cash, that is 3,000 and 2,000 by W's capital account and R's capital account. 3,000 and 2,000. Done. Now debtors of 1,500 will be written off as bad debts, and 5% will be created on bad and doubtful debts. So let us take the debtors value as how much? 18,000. 18,000. And in this, no, 1,500 will be written off as bad debt, which is 16,500. Out of this, 5% will be created as provision for doubtful debts. 425. 16,500 minus 425, so how much? 16,075. Any doubts? Perfect. Now By this, revaluation loss is going to be created, but if we see, no, there is already a provision of how much? 2000. So the new bad debts are how much? 1500, and PDD how much? 425%. No, 5% provision is 825. 825. When we subtract this, 1700, 1675. Got it? Now, if you see, no, already there is a provision of how much? 2000. From that provision, 1500 will be written off as bad debt to existing provision to new bad debts 1500. Add new provision 825, which will be 2325. Out of that, old provision should be subtracted 2000. So the net loss is how much? 325. This is how we need. Next, outstanding salaries will be paid off. Outstanding salaries will be paid off. Now, what is the amount of outstanding salary? 3000. So when outstanding salary is paid off, like this, 3000 is paid off, and in liabilities, outstanding salary is going to become 0. So no need to record. Stock will be depreciated by 10%. Stock value is 20,000. 20,000 minus 10% depreciation 2000, which will be how much? 18,000. Next, furniture by 5,000. Furniture 40,000. 5,000. 5,000. Next, we are having plant and machinery by 8%. Plant and machinery 40,000. Going to be subtracted by 3,200 will be 36,800. Plant and machinery 3,100. Investments of 2,500 not mentioned in balance sheet were taken into account. There is an unrecorded asset of investments worth 2,500 which was not mentioned in your balance sheet. Now we are going to record that 2,500, and that is profit for us by investments 2,500. Now if we check, we are done with prepare journal entries and prepare ledger accounts. We have made the ledger accounts. We will do journal entries in the next part. By investments 2,500 done. Now we are going to close the accounts. So if you see now, the total is 2,500 on credit side, and debit side we are having 325, 2,325, 577, then 10,575. Total 10,575. Out of this 10,575, 2,500 if you are going to subtract, you will be having 8,075, which is to be shared among W and R in 3:2 ratio. W is capital account, R is capital account. 8,075 if you share in 3 by 5, 3 divided by 5, 5, 16, 15 into this 48, 45, 48, 45. If you remove this, you'll be having 32, 30. Correct. This is 10,525. 1,525. It is 8,025. 8,025 if you share 8,025 into 3 by 5 is 4815. 48 and this is 3210. This is revaluation loss. It is going to be transferred over here. Revaluation account. Here you can write as by loss transfer. 48 and this 3210. Just total it. This side it is 53 plus 650, 9,000. Also 59,000. 59,000 minus 3,000 minus 4,815. How much more? To balance carried on, capital balance. 511. Yeah. 3,000 plus 52. 6,000. 6,000. If you remove 50790 and this is 30,000. 30,000 capital balance. And this balance carried on will come over here. Capital balance, capital accounts. W, R and C. This 51,185. Next 50, 190. Next 30,000. We have recorded capital balances. Now next reserve. General reserve is distributed. Outstanding salary is paid off. Provision for doubtful debts adjustment is done. Creditors is 20,000. We have recorded that. Now cash is 12,000. So cash we need to close the account. We close this account now. 12 plus 30, 42. 42 plus 10, 52,000. 52,000. And in this side, if you see 8,000 is, so there will be a balance carried on of 44,000. This is 44,000. Done. Now we have done this. So the total value of balance sheet is value with what? 51,975 is the total value. 75. This is your person. Understood now? Now let us understand journal entries how to write. Basically, when you want to write journal entries as well, okay, in the question they will be asking either journal entries or ledger accounts, and this is going to be 6 marks sum for CBSE people, and ICSE also can refer for the same amount of marks. Now revaluation account debit to bad debts, revaluation account debit to stock, revaluation to furniture, revaluation to plant and machinery, investments to revaluation, loss transfer to revaluation. If you want to write journal entries, just you can frame like this. So same way, cash to cease capital, cash to premium for goodwill, W's capital account, R's capital account debit to cash, outstanding salary to cash. So almost here all entries will be done here only. Okay, premium for goodwill entry you need to write. Entries will be doing on the later part. Let us focus first on ledger accounts. Understood this one? It's not. Now let us focus on our second sum. Now this is our sets. ABC are the partners. Let us understand the question. So without reading the question, we can follow the simple steps to close these accounts. Valuation account, partners capital account, balance sheet, and cash in bank account you need to prepare. So how to do? First, we need to record our capital balances. Balance brought down, that is 8 lakhs and 4 lakhs, and cash account balance. When you are having cash in hand and cash in bank, I am preparing cash and bank account. I can add both the balances and write, or else you can take only bank account to record. 5,75,000 plus 25,000, 6 lakhs. Done. Now we need to check for reserves. As usual, general reserve is there. Let's check if there is any adjustment for general reserve. I don't see any adjustment, and we are having goodwill, which is appearing on the balance sheet asset side, that will be distributed among the old partners in old ratio. 3:2 is the ratio as usual. So 2 okay by general reserve. You see general reserve is 1,50,000, distribute in 3:2 ratio. 3 upon 5. 5 ones are 5 threes are 30,000 into 3 is 90, and this is 60,000. And goodwill is 50,000. So 50,000 if you distribute, so 3 upon 5 is 10. 10,000 threes are 30,000, and 50,000 into 2 by 5, which is 20,000. If one is 30,000, the other will be 20,000. So 2 goodwill 30,000 and 20,000. Reserve is done, goodwill is done. I don't see any other losses. C will bring 5 lakh as his capital. So cash to his capital account. This is our basic primary. Once we are done, we can come to the adjustments. 5 lakhs and 2 lakh for his premium, for share of goodwill premium, but he actually contributed only what, 1,20,000. Now 2 lakhs is the total goodwill, but he bought 1,20,000, and remaining 80,000 he needs to bring. So 1,20,000 which he had bought, same like last time we are going to do, cash to premium for goodwill 1,20,000, and buy premium for goodwill, which will be shared among sacrificing ratio. Do we have any new ratio? The third C was admitted. No, there is no adjustment. So only 3:2 is the ratio. So 1,20,000 into 3 by 5. Yes, 5 ones are 5. 24,000 threes are 72,000. So here it is 72,000. If one is 72,000, obviously other will be 48,000. 120 minus 72, like that also we can. And remaining 80,000 which he had not bought, so that will be distributed to the partners, but it is made as due. C's current account will be opened for the remaining 80,000 part. 80,000 will be distributed in same 3:2 ratio, which is 48,000 and 32,000. So this is due. It is like asset. C's current account 80,000. Done. Now building and machinery will be depreciated by 5%. So building value, if you see now, 5 lakhs is the value. So building 3 lakh minus 25,000, which is 4,75,000, and 2 building. Losses all are recorded on the debit side and profits are recorded on the credit side of revaluation account. Discussed earlier. Building 25,000. Next, machinery will be depreciated by 5%. Machinery value is 2 lakhs minus 10,000, which is 1,90,000. To machinery. 10,000. Next building is done, machinery is done. Stock will be revalued at 4 lakhs. Stock is at 3 lakhs now. 3 lakh plus 1 lakh will give you 4 lakhs. By stock 1 lakh done. There is an unrecorded delivery one worth 1,20,000. There was an unrecorded asset. Unrecorded delivery 1,20,000. The unrecorded event. Once you are done with this, 1 month salary of 30,000 is outstanding. We missed to record that. Same way, outstanding salary 30,000 to outstanding 30,000. Done. We are done with the sum. We need to prepare evaluation account, bank account, capital accounts of the partners in the balance sheet. So we need to prepare evaluation account, partners capital account, and bank account. So since they have asked to prepare only bank account, I'll take this as only bank balance. 5,25,000. Done with the sum. Now evaluation account. If you add the total 1 lakh plus 1,20,000, 2,20,000. And if you see the balance 220 minus 5, 35, 35, 65, 1,55,000. To profit transfer to A and B, and the ratio is 3:2. The same 1,55,000 to 3 upon 5, 5 ones are 531, 31 threes are 93,000. So if one is 93,000, the other is going to be 62,000, and this revaluation profit is going to be transferred to capital account by revaluation account. 93,000 and 62,000. Now need to check for partners capital account balances. So balance carried down 8 lakhs plus 9890 plus 72,000. 890, 1062, 1062, 1070, 1070 plus 40, 1110, 1110 will not 3,000. Let us do the total of these sides. Not 3,000, 2 and not 3,000. Here 4, 460, 460, 508, 508, 510, 510, 540, 6 not 2,000. This is 5. It's not 1,000, and this is 5 lakhs. 5 lakhs minus nothing. It's not 2 minus 20,000. 5 lakh 82,000. 12 not 3 minus 30. 7 lakh 73,000, and this will be taken on the other side. The His total is 11 lakh 70. His total is 5 lakh 82,000, and this is 5 lakhs. Since it is balance is taken to balance sheet. Now we are done with creditors 2,50,000. So we need to record the other liabilities. First one comes with creditors 2,50,000. And next bills payable 1 lakh. Eight eight nine 8 lakh plus 890 962 970 10 10 11 lakh 3,000. Fine. This is one. This is 11 3,000. This is 10 1070. 73. Perfect. Bills payable done 1 lakh. General reserve is already distributed. So this side cash in hand we did not do any adjustment for this time. So cash in hand is written as usual 25,000. Let us close the bank account. Bank account balance is how much? 575, 5 lakh, 1075, 1075, 1095, 1195, right? At bank 11 lakh 95,000. The cash at bank is done with 11 lakh 95,000. Then returns we have not recorded. Returns are 50,000. We have adjusted stock 3 lakhs. Stock is recorded. Building done. Plant and machinery done. Plant and machinery. So I think so balance sheet will tally with this amount. How much my amount? 10 lakh 73 plus 582,000 plus 5. 25 lakh 35,000 on both sides, right? 35,000. That's it. The balance sheet is done. Let us record this. Please note on this. Let us continue with this. The partners are Raman, Aman, and Aman. Cash at bank only one. Now our basic step is to record capital account balances 3 lakhs and 1 lakh 50,000. So by balance brought down 3 lakhs and 1 lakh 50,000. To balance brought down, cash at bank is 24,000. Now we'll check for reserves. There is workman compensation reserve of 50,000. I think so. There will be workman compensation adjustment. So let us wait for this. Apart from this, there are no losses. So we can directly jump into the question. Suman will bring 2 lakh as his capital. So cash to Suman's capital account. Suman's capital account. 2 lakhs. By cash. Suman's capital and necessary share of goodwill premium. If goodwill of the firm is what? 1 lakh. Now let us, this is firm value. Firm total goodwill is 1 lakh, but the new partner is not going to get what? Complete share of goodwill. He will bring only his share. His share is 1 by 5th. So 1 lakh into 1 by 5 is what? 20,000. So the 20,000 goodwill will be distributed among whom? Raman and Aman in their sacrificing ratio. Let's check whether the new one. No. The question consists of only normal part, and the old ratio is as usual 3:1. 1,000 and 5,000. So here cash to premium for goodwill 20,000 and buy premium for goodwill 15,000 and 5,000. Outstanding expenses will be paid off. 5,000 will be written off as bad debts, and outstanding expenses will be paid off. This is separate adjustment. Outstanding expenses are 18,000. These are paid off. Outstanding expenses 1,000 going to be 0, and this paid through cash by outstanding expenses. Outstanding expenses on debit to cash account. 5,000 will be written off as bad debts and a provision. %5 of bad debts on debtors was to be maintained. So let us see. The debtors value is 95,000. Yes, bad debts is 5,000. 90,000 minus provision for which will be created at 5%. 5%, 90,000 into 5% is 500, which is 85,500. Perfect. Now, if our new provision and bad debts are, let's take bad debts as 5,000 and provision for doubtful debts is 4,500. Now there is already a provision. There is already a provision of how much? 7,000. So from previous provision we can write off bad debts of 5,000. So 2,000 still provision is left, and the new provision is 4,500. So the balance in the provision is 2,500, which is loss. For doubtful debts, 2,500. Let us. The liability of workman compensation was estimated to be 60,000. Workman compensation liability 60,000. And if you observe workman compensation reserve, we already have how much? 55,000. So reserve, from reserve we will be able to take 55,000, and remaining 5,000 need to be workman compensation liability. 5,000 revaluation. Machinery will be depreciated by 18,000. Building by 4,000. 18,000 and building by 54,000. We are having plant and machinery already 2 lakhs. Lakhs minus is 1,82,000. Since this is lost to plant and machinery 1,000. Land and building 196,000. Yes, 1,000, which is 1,42,000. And have any adjustments? Done. Valuation account, partners capital account, cash. Perfect. With this we have done, and we are going to close accounts. Sorry. Uh, done. Evaluation account, let's close first. If we do the totaling part, time I see there is completely lost 2500, 5000, 18,000, 54. 54 plus 18, 72,000, 72, 77, 79,500. That's it, right? Evaluation loss. Why? Loss transferred among Raman and Aman capital account. What is the ratio? 3 is to 1. 79,500. We distribute in 3 is to 1. What is the ratio? 59, 625 and 19, 19,870. This will go valuation. 59, 25 and 19,875. By balancing revaluation account, we are getting loss. That loss is transferred to capital account. Now similarly, we are going to balance partners capital account. Here we are having 3 lakh plus 15,000. 3 lakh 15,000, and here we are having 1 lakh 50,000 plus 5,000, 1 lakh 55,000, and here we are having 2. Balance carry 3 lakh 15,000 minus 59,625 is how much? 1 lakh 55,000 minus 198, 19,875, 125. Here 2 lakhs. These balances will go as what? Capital account. Someone lakh 55, 375, 1 lakh 35, 125. This is 2 lakhs. Perfect. Now cash account also will close it out. So how much is the balance by balance carried down? 24 plus 20,000, lakh 44,000. 44 minus 18 is how much? 2 lakh 1,000 as cash. Just 2 lakh 26,000. Bank account. Done. Now write down remaining liabilities. Provision for doubtful debts we have adjusted. Outstanding expenses we have done, closed out, and bills payable 47,000, and creditors are payable. We are having bills payable value of how much? 47,000. Creditors we are having 102,000. Still outstanding is work on compensation done. Perfect. Cash in bank we have done. Bills receivable is there 80,000. Receivable 80,000 is done. Debtors are being adjusted 14,000. Stop. I am writing over here 14,000. Next, furniture 70,000. Furniture 70,000. Afterwards, plant and machinery is being adjusted already, and then building is also adjusted. This we have done the sum. Perfect. Close the values. How much more? Answer 799, 500, 500. This is the value of. This is the question, and this is the answer. Just focus it. Just note down. Just make a note of. Now let's focus on the next sum. This we have already done. New partner is not going to bring the goodwill share in cash. So how we are going to do that? We are going to open current account. So this is basic question again, the same things. Let us do it. We are having capital balance 1,000 and 60,000. Profit and loss account so and so. And then one is workman compensation reserve, and here there is P&L account. Workman compensation also. There any adjustment? Yes, there is adjustment. Okay, you can do at that time as well. Not an issue. Debtors are to be paid. Let us do this sum. Prepare revaluation account, bank account, capital accounts, and so cash at bank is there. Only bank account you need to. But not an issue. No need to write any. Prepare bank account. Who are the partners? A, B, C. C. Capital account balances are 50,000 and high balance brought down 50,000, and cash account balance to balance brought down. Bank account balance is how much? 10,000. Done. Now check for reserves. There is workman compensation reserve and there is adjustment also for workman compensation. We'll do at that time only. So if you see there is a loss 4,000, and what is the old ratio is? Okay, this is very good question. This question, old ratio is not given. So generally if old ratio is not given, we will be assuming that as what? 1:1. But specifically in this question, new ratio is given. Whenever new ratio is given, so 3:2:1, this is going to become your old ratio and sacrificing ratio as well. 3:2. The logic behind this is we assume that what the partners are going to sacrifice in their old ratio. Once sacrificing ratio is added to the total part, after distributing the sacrificing part, total part again will be adjusted in what? Old ratio only. Here, so new ratio consists of what? Old ratio 3:2. This is important question in this. Apart from that, there is nothing. So C will bring 40,000 as his capital and he is unable to bring his share of goodwill premium. So let us write down our basic steps. First we will be recording our capital account balances and cash account balance. Afterwards we are going to distribute the loss, which is 4,000 to be distributed in 3:2 ratio. So 4,000 upon 5 is 2,400. 4,000 to 2 on 5, which is 1,600. One we calculate now, the other you can subtract and write. P&L account is 2,400 and 1,600. Any doubts? Capital account balance is done and goodwill is being calculated. He will bring 40,000 as his capital. Capital 1,000, and here you are going to write by cash is again 40,000. Now coming to goodwill. and he is unable to bring his share of goodwill premium. Okay, was unable to bring, and there here the information is given with respect to goodwill. There we will add this point, not an issue. New profit sharing ratio is 3:2:1. Claim towards workman compensation is how much? 3,000. Workman compensation liability, irrespective of reserve amount, write down just workman compensation liability. This 3,000. Now check for reserve. How much we are having? 5,600. Now earlier case, here reserve is more and liabilities are less, so still we are having 2,600 in the balance reserve that will be distributed among the partners by workman compensation reserve 2,600. What is the ratio? 3:2. How much more? In 60 and 1,040. 1,040 done. 6,000 will be written off as bad debts. So debtors, if you see 80,000, just subtract the new adjustments, bad debts. How much? 6,000. So here you are going to get 74,000. And if you see now, bad debts are 6,000 and provision is 4,000. So bad debt कितना है? 6,000. Provision जाएगा 4,000. 4,000 is balance. Still we are having bad debts only more. Bad debt 2,000. Next, creditors are to be paid 2,000 more. Creditors are 30,000 and they are to be paid 2,000 more. Creditors 30,000 add 2,000, which is 32,000. Or 2 creditors. Next, 2,000 to be provided for unrecorded liability for damages. Then damages 1,000. Liability goes up. Next क्या है? Once you are done with unrecorded liability for damages, outstanding expenses are to be brought down to 1,200. You see outstanding expenses 3,000. They are brought down to 1,200, means you will subtract 1,800. So ये हो जाता है to outstanding expenses. Ah yes, perfect. Next, an old customer whose account was written off as bad debt has promised to pay you how much? 2,500 on settlement of her dues. Now there was an old customer, you have recorded them as bad debt. Now she is coming and she is promising that what? I'll pay you 2,500. Okay, so with this what we can do is by bad debts to be recovered, 2,500, and can add them to debtors. This will become 500. Now let us understand. Goodwill is valued on 1.5 years purchase of average profits of last 3 years less 12,000. Now let us do this one. Goodwill is valued at 1.5 years purchase of average profits of last 3 years. 1.5 years purchase of average profits of last 3 years. What is the average profits of last 3 years? 10,000 plus 20,000 plus 30,000 divided by 3. 20,000. So 20,000 into 1.5. Generally, if we do know, this will be our goodwill. But here they are telling minus 12,000. So 30,000 minus 12,000, which is 18,000 is going to become the goodwill. So here, when this sum comes, bod mass should be in your mind. So addition will be doing, however, we'll find average profit, that is division. Afterwards, multiplication of how much? 1.5. Afterwards, you are going to do what? Negative 12,000, which will amount to what? 18,000. Any doubts? 18,000 is a goodwill, and this he was unable to bring. So here you will write by C's current account. Here also C's current account 18,000, which will be distributed in 3:2 ratio. 18,000 if you do in 3:2 ratio, what is the amount? Small mistake, ma. 18,000 is firm's goodwill. So 18,000 ko you need to multiply with 1 by 6, which is 3,000. Here, so the goodwill will be distributed in 3:2 ratio. 3:2 ratio is 3,000, no? 1,800. Next, 1,200. Done. With this, we have done the adjustments. Let us close revaluation account first. Revaluation account, if you 1,000, 2,000, 6,000 में से ये निकाल दो, 4,300 will be 1,700 by cost run. So A and B, 1,700. What is the ratio? 3:2. You distribute, what will be the amount? 1,020 and 580. 680. ये आ जाता 2 रिव्यू हो गया. अब क्लोज कर देंगे ये अकाउंट्स. 3 plus 15, 60 plus 1,800 कितना होता? 53, 53, 360. 61, 62, 62, 40. Next, 40,000. 62 to 40,000. Here, getting balance cash. 49, 9, 40, and this is 59, 60, 40,000. Capitals A and C. 49, 9, 40. Next 960. Next 40,000. Okay, done. Cash balance. Okay. So no only bank accounts. No need to write any cash. 50,000. After writing this bank balance, still we are having what debtors are there. This current account we have recorded. Stock, plant and machinery. Stock balance we are having 1,000. Plant and this will be 8,000. And do we have anything else? No, we don't have. Workman compensation liabilities adjusted, creditors are done, outstanding expenses are being adjusted. Perfect. Capital accounts are recorded. This should be tallied with a figure of 26,500 plus 3,000 plus 50,000 plus 20,000 plus 38,600. And 88, 100. 8, 100. This is the total. No. Please note down this sum. Sum. Done now with this question. Let's do the next one. This is the partners of adjustment. Now the question is, when partners capital accounts are fixed, so we need to prepare both capital accounts as well as current accounts. Partner capital. Partners. For the Sukash, Asha and Tanya. You write complete name. Sukash, Asha and Tanya. Now let us do this question. Cash balance we are having 25,000. Now write down capital account balances and current account balances. Thousand. Current account balances are 50,000 and capital account balance is done, current account balance is done. After writing capital account balances and current account balance, cash and bank balance, we need to check for reserves and losses. Here we are having general reserve and we are having goodwill as well. In the goodwill is appearing in the balance sheet, so we will distribute to the old partners in old ratio 3:2. General reserve 60,000. So all adjustments are done through current account. You should not touch capital account. General reserve 60,000. So 60,000 in 3:2 ratio. Just 36,000 and 24,000. Any doubts? And 24,000. This is done. Next we are having what? Losses goodwill. 50,000. 50,000 will be distributed in 3:2 ratio. 30,000 and 20,000. Next we are having provision for doubtful debts to be maintained at 5% on debtors. Debtors is 1 lakh and provision is already we are having 4,000. Okay, no problem. Debtors is 1 lakh minus doubtful is 5%. 5,000. 195,000. And if you observe the previous provision as 4,000 and current provision is how much? 5,000. So 1,000 is additional provision. You can mention provision for doubtful debts, not an issue. An outstanding bill for repair of 25,000 is accounted in the books. Forgot to mention this outstanding bill for repairs 25,000. This is going to be revaluation loss. So outstanding bill for repair 25,000. Next, an unaccounted interest accrued 7,500 is to be provided. Unaccounted unaccounted interest, sorry, 7,500. After that, we are having Subhash takes the investments at an agreed value of 30,000. Now, if you see investments, that is 40. Investments are of 40,000 and he has taken over at 30,000. Here it is mentioned agreed value of 30,000. So total investments he is taking. So investments, there will be no balance and it is taken over by Subhash to investments 30,000. And in this transaction, we are having a loss of how much? 10,000. Investments 10,000. That's it. Perfect. Any doubts we are having? Investments is done. Afterwards, expenses on revaluation amounted to 5,000 are paid by Subhash. First thing, generally revaluation expenses will be paid by firm. Now here partner is paying it. So firm need to reimburse that to partner. So we will add that by revaluation expenses. Subhash will be going to get 3,000 and for the firm it is loss. Valuation expenses 3,000. Sorry, 5,000. 5,000 हो गया. Next stock is to be revalued at 79,000. Stock is to be revalued at 79,000. Revalued at 79,000. Now compare the previous value 74. So stock is getting added by 5,000. Any doubts? New profit sharing ratio is 4:3:2. Finally, we have got that question, which is having what? New ratio and old ratio. Now, whenever new ratio and old ratio are mentioned, so we need to calculate what? Sacrificing ratio. We need to calculate what? sacrificing ratio, which is old ratio minus new ratio. Formula is old ratio minus new ratio. Sacrificing ratio of Subhash 3 by 5 minus 4 by 10, 4, 3, 7, 2, 9. 4 by 9, which is 27 minus 20 divided by 45, which is 7 by 45. Next, 2 by 5 minus 3 by 9, which is 18 minus 15 divided by 45, which is 3 by 45. Therefore, sacrificing ratio is 7 is to 3. That's it. So, how much is the goodwill value? Goodwill we will do. Okay, 7 is to 3. That is the ratio for sacrificing ratio we have calculated. Tanya will bring 1 lakh as his capital. Tanya to get what? Tanya's capital. Yes, 1 lakh by cash. Tanya is going to get, sorry, mistake. The only thing which comes in the capital accounts is new partner bringing the capital by cash. Tanya's capital account 1 lakh. That's it. Without Tanya is to pay an amount equal to his share in the firm's goodwill at twice the average profits of last 3 years: 150, 130, 120, 5,000. 1 lakh 50,000 plus 1 lakh 30,000 plus 1 lakh 25,000 divided by 3. This will be average profit, and here it is mentioned twice, so 2 times. This will be how much? 2,70,000. And in that, it is Tanya is not going to bring the entire amount as goodwill. She got only how much? 2 by 9. So into 2 divided by 9. 9 ones are 9 threes are 30,000 into 2, 60,000. This goodwill is distributed among whom? S and A in the ratio 7 is to 3, which is 42,000. And next 18,000 to premium for goodwill 60,000, and by premium for goodwill, which is 42,000 and 18,000. That's it. We have distributed the goodwill as well. Got it, ma? Half of the amount of goodwill is withdrawn by Subhash and Asha. This we have done in our first sum. When goodwill is withdrawn, you will write as what? Cash, and half is withdrawn, 21,000 and 9,000 by S capital account and A's capital. This 21,000 and 9,000. That's it, ma. We are done with the sum. So we'll close the account. If 1,000 plus 25,000, 26, 26 plus 1,030, 27, 27 plus 5, 32,000. Sorry, this is 10 now. 25, 35, 35, 40, 41,000. 41,000 में से 12,500 if you remove, no, by first transfer. 8,500 और S and A. S अकाउंट में कितना रहेगा? 17,100 and 11,400, which is 3:2 ratio, and this is going to be transferred to current account. Capital account, you don't touch it. Evaluation account, 17,100, 7,400. Got it? Any doubts? No, right? Now let us balance the remaining account. Now let us understand this: 50, 36, 86, 86, 591, 91 plus 42. Just 93, 1 lakh, 33,000. Next, 10, 34, 34, 842, 52,000. 52,000. To balance carried down, and here we are having 3 lakh, 1 lakh, 1,000, and only 1 lakh, lakhs, 1 lakh 50,000, 1 lakh, 3 lakh, lakh 50, 1 lakh. Minus this 133,000 minus 30,000 minus 30,000 minus 21,000 minus 17,100. You've got 3,000. We are getting 34,900, and here we are getting 7,600. Perfect. Now these balances are going to be taken to balance sheet. Having two capital account balances of SA and T, lakh, 1 lakh, 1,000, and 1 lakh, and current account S and A are having 34,900 and 7,600. Now let us complete the remaining accounts. Creditors, we are having 75,000. Afterwards, general reserve is distributed, capital current accounts are done. Now let us check cash at bank. So bank account balance, if you see, 25 plus lakh plus 60, 185. Here also we are going to get 185,000. 185 minus 30, 1 lakh 55,000. Going to be high balance. Cash at bank, 1 lakh 50,000. So it is nothing but only cash account, only bank accounts. 1,55,000 is done. Returns have adjusted. Stock we have considered. Investments are done. Only fixed assets of 3,60,000 need. Fixed assets 60,000. That's it. Done. What is the balance sheet total, ma? It's 96, 500. Valid. This is revaluation loss. Red color goes to current account. These are green color pens. Balances which are being reported in balance sheet. Balances are going to be transferred to balance sheet. Last, which we have missed to record the liabilities and assets, we have calculated. This is how we are going to do this.